Everyone thought the big mortgage crisis in Canada was supposed to happen 2 years ago. People were predicting foreclosures, panic selling, default, and a full real estate crash. But that didn't really happen, at least not the way people expected. But here's the part, many homeowners in BC need to pay attention to it now. The mortgage renewal wave is turning into a shock wave. And for homeowners in Surrey, Langley, the Fraser Valley, or anywhere across the Metro Vancouver area, this next round of renewals may feel very difficult from the first one. Not because everyone is suddenly going to lose their homes, but because monthly cash flows is getting tighter. Rental incomes have softened. Tenants who are living in basements are finding for the similar price they are getting condos in Surrey Central, hence making the switch, leaving homeowners with mortgage helpers in a limbo. Savings are thinner and families are already dealing with much higher cost of living. So in this video, let's talk about what is actually happening, why this renewal wave matters, and what you should be doing before your mortgage renewal date arrives. Before we get into it, if you're a homeowner in BC and you want a realistic read on your property value or your options, reach out. No pressure, no sales pitch, just honest advice so you can make a better decision. If you haven't done so already, hit the subscribe button and the bell icon so that you can know about every single video that I put out. A couple of years ago, when the Bank of Canada started raising interest rates aggressively, a lot of people thought the real estate market was going to fall apart. And honestly, I thought the same. You can understand why that is, right? During the pandemic, many people bought homes at very low interest rates. Some buyers were locked in at rates that looked almost unbelievable today. The rates moved out very quickly, so the concern was simply when those mortgage renewal payments will jump. People won't be able to afford them, and we'll see a wave of forced selling. And a lot of YouTube videos right now are showing foreclosures are surging. But that's not exactly what happened. Yes, payments went up. Yes, many families had to adjust their budgets. Vacations were cancelled, renovations were delayed, people started eating out less, families became more careful with their spending, but we did not see the massive foreclosure wave that many people were predicting. And the reason is very simple. People will fight very hard to keep their homes. Most home buyers do not just hand the keys back because the payments became uncomfortable. They cut spendings everywhere else first. They cut lifestyle spendings, they delay upgrades, they take fewer trips, they may pick up an extra work. Some even get family support, and lenders also work with many borrowers. In some cases, amortizations were extended, payment structures were adjusted, and homeowners were given options to manage this increase. So the first wave was painful, but the system absorbed it better than expected. But now we have to talk about the second wave because this one is different. Homeowners renewing now are not in the same position they were 2 to 3 years ago. That is the key point. Back then, many households still had some savings. Job market was stronger, rental income was stronger, and people had flexibility in their budget. Today, that cushion is much thinner. The cost of living has been high for a long time now. Groceries are more expensive, insurance is more expensive, gas is more expensive, strata fees have gone up, property taxes have gone up, repairs and maintenance are more expensive now than ever. Almost everything has become more expensive. So when a homeowner renews today, they are not just dealing with higher mortgage payments, they are dealing with a higher mortgage payment on top of everything already being more expensive. That is where the pressure comes from. And for many families, it is not one big dramatic event. It is a very slow squeeze. An extra few $100s here, higher strata fees there, insurance is up, property taxes go up, and grocery bills are higher. And maybe your tenant moved out. Maybe your hours of work got cut. One thing alone may not break the budget, but when all of these things happen together, the math starts getting very tight. When we talk about mortgage renewals, most people immediately think about foreclosure. Are people going to lose their homes? That is an important question, but I don't think that is the full story. The bigger issue is cash flow. Every extra dollar going towards a mortgage payment is a dollar that is not going somewhere else. It is not going to a local restaurant. It is not going to a contractor. It is not going to a small business. And it's definitely not going towards a family vacation or a renovation or a new car that y'all deserve. And when households reduce spending, businesses feel it. Then businesses cut hours, they delay hiring, they reduce expenses, and in some cases, they close down. That is how pressure spreads. It is not always dramatic. It does not always show up as a sudden crash. Sometimes it shows up as fewer people in restaurants, contractors getting fewer calls, retail stores slowing down, and families becoming more cautious. And in BC, especially in the lower mainland, this matters because housing costs already take up such a large part of household incomes. In places like Surrey, Langley, Coquitlam, Burnaby, Metro Vancouver, Maple Ridge, or the Fraser Valley, many households are already stretched. So, when the mortgage payment moves up, that impact is very real. A lot of people assume condo owners are the most exposed because many condos were bought at higher prices during the peak of the market. And yes, some condo owners are definitely feeling the pressure. But I'm also thinking detached homeowners need to pay very close attention. And here is why. Many detached homeowners in the lower mainland bought with the help of rental income, maybe a basement suite or a coach house or a secondary suite. For many families, that rental income was not a bonus, it was part of their affordability plan. And that time the mortgage worked because the suites helped carry the payments. But now, if the mortgage payment goes up and the rental income softens, both sides of the equation are moving in the wrong direction. You are paying more, but you are not able to collect more, you are collecting less. And even if rents are not collapsing, tenants today have much more options than they did many years before. So if your suite was rented at a very strong number 2 years ago, do not automatically assume you can get the same numbers today. You have to check the current real estate market, look at what similar suites are actually asking, look at how long they are sitting, look at the tenants and what they are negotiating. Because if your mortgage renewal plan depends on rental income, you need to be realistic about your numbers and not use the best case scenario. Another thing people assume is if the payments become too high, I'll just sell. But in today's market, selling is not always that simple. First, the market is very price sensitive. Buyers have more options. They are comparing everything. They are also negotiating harder. Secondly, selling costs money. You have real estate fees, legal fees, moving costs, mortgage penalties in some cases, and other closing costs. So even if your property value has not dropped dramatically, once you factor in all these costs, the final number may not be as strong as you think. That is why timing and strategy matters. A proactive sale is very different from a forced sale. When you are proactive, you can prepare the home properly, you can price it properly, you can negotiate from a better position, and you can make decisions with a clear head. When you are forced, you are usually reacting under pressure. That is never the best place to be. So, if you know your mortgage renewal is coming up, you are already worried about your payments. Do not wait till the last moment. Start looking at your options early. 6 to 8 months is the preferred timeline because it is average taking around 4 months for a property to sell in the current market if priced right. So, who should really be paying attention to this market at this time? Number one, if you bought your home in 2021 or and your mortgage renewals are coming up, you need to run your numbers now. Do not wait for the renewal letter. Do not wait until you are 30 days away. Start early. Number two, if you're a detached homeowner relying on the rentals income from your suite, you need to stress test your budget. Ask yourself, what happens if the suite rents for less? What happens if it sits vacant for a month, two, maybe three? What happens if repairs come up? Number three, if your household income has any uncertainty, maybe because of your job, your business, or your industry is slowing down, you need to be extra careful. The mortgage does not adjust because your income got weaker. The payment is still due. Number four, if you own multiple properties, look at each property separately. Do not assume everything is fine just because the portfolio looks okay overall. Some properties may have strong cash flow, others may be barely carrying themselves. You need to know which one is which. Now let's talk about what you actually can do. Because the purpose of this video is not to create any fears, the purpose is to help you prepare. The first thing is to know your renewal date. That sounds basic, but many homeowners do not know exactly when their mortgage is renewing. Find that date, then speak to your mortgage broker or lender at least 4 to 6 months in advance. Give yourself time. You may be able to get a rate hold. You may be able to compare lenders. You may be able to look at different products, but you need time to do that properly. Secondly, get a realistic idea of your property value, not your BC assessment. I repeat, not your BC assessment, because a lot of properties are selling for way lesser in the current market than what they have been assessed by the BC assessment. Certainly not what your neighbor thinks and what your neighbor has listed his property for, because what is listing to what is selling is completely different. You need to know what your property would likely sell for in today's market based on real comparable sales. The numbers matter because it affects your refinancing options, your equity position, and your overall plan. Third, if you rely on rental income, use conservative rental numbers. Do not build your budget on the highest possible rent. Use a number that is realistic in today's market. Negotiate with your current tenant. Give him a better deal than he moving out and you're getting less than what you could have potentially negotiated with him for. Look at your full month budget, not just the mortgage. Look at your property taxes, strata fees, insurance, utilities, maintenance, debt payment, car payments, groceries, everything in general. Because a mortgage renewal is only one piece of your financial picture. Fifth, if selling might be part of the plan, have that conversation early. You do not have to sell just because you asked the question, but you should know your options. Sometimes the right decision is to hold. Sometimes the right decision is to refinance. Sometimes the right decision is to sell and reposition. But the worst decision is to ignore the problem until you have no flexibility left. Here is my take. I do not think every homeowner is in trouble. I do not think the market is going to crash overnight. And I definitely do not believe in creating a panic just to get attention. But I do think a lot of homeowners are under more pressure than they are openly talking about. And I think the next 24 months will be very important for BC's housing market. Not because everything is going to sell, not because everyone is going to sell. Most people will not. Most people will do everything they can to keep their home. But the pressure will show up in other ways. People will spend less. Some investors will rethink their properties. Some homeowners will delay moving. Some sellers will become more realistic. Some buyers may find opportunities if they are prepared and patient. And that is why you need to understand the big picture. Real estate is not just about prices going up or going down. It's about affordability, cash flow, confidence, interest rates, employment, and timing. All of these things have to connect. So if your mortgage is coming up for renewal or you're trying to figure out whether to hold, sell or refinance, or buy in this market, start with the numbers. Do not guess, get proper advice, speak to your mortgage broker, understand your property value, understand your monthly cash flow. And if you are in Langley, Surrey, Maple Ridge, Coquitlam, anywhere in the lower mainland, and you want to know your realistic options on where your property stands today, feel free to reach out. There's a link in my description below to book a one-on-one call. No pressure. I will tell you what I see in the market, what your options may look like, and what I would be watching out for. If you found this video helpful, hit the subscribe button and the bell icon and share it with someone whose mortgage renewal is coming up. I'm Roshan Victor and I'm your realtor for life. I'll see you in the next video.